Imagine owning a piece of Nigeria's giant refinery. Dangote may soon make that real. That provocative possibility is now inching toward reality. Aliko Dangote has just announced plans to list part of his multi-billion-dollar refinery on the Nigerian stock exchange, allowing ordinary Nigerians to become shareholders in what he calls a national asset. Here's an in-depth look at what this means, why it matters, and what to watch as the plan unfolds. The big move, what Dangote is proposing. At the 2025 inaugural annual Downstream Petroleum Week, organized by the House of Representatives Committee on Petroleum Resources, Downstream, in Abuja, Dangote made a surprising but ambitious declaration. He revealed that a portion of Dangote Refinery will be sold to Nigerians via public listing on the Nigerian Stock Exchange, allowing citizens to buy shares and become part owners in what he calls a national asset. The refinery group's chief strategy officer, Aliyu Suleiman, represented Dangote in delivering the message. Dangote dismissed claims of downstream monopoly, stressing that no investor is prevented from building their own refinery. He also called on government agencies to bolster industrial policies that support innovation, competition, and productivity in Nigeria's petroleum sector. In short, Dangote is positioning this as not just a business maneuver, but a socio-economic gesture, an effort to democratize ownership and deepen local participation. Why this is significant? From passive consumer to stakeholder, one of the boldest implications is that Nigerians who buy shares will no longer be mere consumers of petrol. They'll become investors who share in profits, dividends, and value appreciation. This shifts the narrative around the refinery from private juggernaut to shared national interest. Signal of confidence and legitimacy. Listing such a large asset gives more transparency, regulatory oversight, and legitimacy. It also allows for market valuation and investor scrutiny, which can discipline management and operations. A counter to monopoly narratives. Critics and observers have long suggested that the Dangote Refinery holds unfair advantage in the downstream sector. Offering shares reframes its position. If the public has skin in the game, allegations of monopoly become more nuanced. Deepening capital markets. If the flotation is large and well executed, Nigeria's stock market could see new levels of liquidity, capital inflow, and investor interest. A successful refinery IPO may encourage other industrial assets to follow suit. The context: Dangote Refinery in Nigeria's energy landscape. To appreciate the weight of this move, we must see where the refinery sits in Nigeria's energy equation. Dangote's refinery is designed to process 650,000 barrels per day, making it one of Africa's biggest single-train refineries. It has already started exporting gasoline, including its first shipment to the U.S., demonstrating that its ambitions extend beyond domestic supply. In recent times, Nigeria ended the exclusive right of NNPC to purchase petrol from the refinery, allowing marketers to buy directly, a major deregulation step. There have been tensions around currency mismatch. Dangote had raised the temporary suspension of fuel sales in Naira, citing that crude purchases are in dollars, thus creating imbalance. The refinery has also had to source crude from international markets due to domestic shortfalls, which raises costs and complicates pricing. Challenges, risks, and criticisms. Valuation and pricing. How much of the refinery will be floated? At what price? These questions will be pivotal. Overvaluation may discourage investors. Undervaluation may trigger accusations of giving away national value cheaply. Regulatory and political risk. A listing of such magnitude will draw government scrutiny, regulatory oversight, and possibly political intervention, especially since the refinery is tied to national fuel supply. Any change in policy, subsidy, or political will can disrupt share value and operations. Currency and input mismatch. Dangote has flagged that fuel sales in Naira don't always align well with crude sourcing in dollars. This currency mismatch could strain margins. Supply constraints. Domestic crude production remains under pressure, and Dangote's reliance on imports makes operations vulnerable to global oil price swings, exchange rate volatility, and supply disruptions. Market confidence and execution. Executing an IPO of this scale demands impeccable governance, disclosure, and investor trust. Any lapses will damage confidence and deter future industrial listings. What could go right? The upside scenarios. If done well, this move could yield major gains. Wealth building for Nigerians. Citizens with moderate capital could gain access to dividends and capital gains. Reinforced public legitimacy. The refinery may become more accountable and responsive to public interest. Stronger capital markets. Large infrastructure IPOs can attract institutional and foreign investors, lifting overall capitalization and sophistication. Competitive downstream industry. If Dangote's model opens space for others, more private refineries may emerge. Energy sovereignty. More domestic investment in refining can gradually wean Nigeria off fuel import dependence. What to watch? Signs, milestones, and red flags. Pre-IPO movements. Look for announcements of share allotment size, prospectus filings, regulatory approvals from SEC, and engagement with stockbrokers and underwriters. Institutional interest. Do pension funds, insurance firms, or foreign institutional investors show appetite? Their involvement could validate the float. Pricing and performance. Once listed, how the shares fare in early trading will be a litmus test. Strong demand and upward momentum would be a positive sign. Dividend policy. Will dividends be regular and meaningful? Investors will watch how profits are shared versus reinvested. Regulatory changes. Any policy shifts, subsidy moves, or restrictions on fuel distribution could affect revenue dynamics. A new chapter? Or just a PR ploy? This announcement from Dangote may represent a turning point, a shift from opaque industrial behemoth to shared economic platform. But whether this becomes a transformative moment or a symbolic gesture depends heavily on execution, transparency, and structural support. The notion of Nigerians owning part of the refinery is compelling. It repositions energy from being extractive to participatory. But for citizens to truly benefit, the listing must be fair, inclusive, and backed by strong governance.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.